The government is often criticised in terms of reform, and I certainly welcome the recent pre-legislative scrutiny which has taken place over the last number of years and which was used in the preparation, the drawing up of this bill. The pre-legislative scrutiny allows for the discussion, examination, debate and enhances legislation, and it can be seen in this. The only downside is, of course, the added time that ensues. Last summer, the Department initiated consultation regarding this bill, and 19 submissions were received with various groups, organisations and civil society. And indeed, the Department met with some of the submittees after that to clarify some of the issues that have been raised. And indeed, this consultation led to changes in the approach in relation to how the bill was prepared, and it shows the importance of the process. The Department also met with officials in the United Kingdom, which had gone through some of these issues as well recently, and also a discussion before Christmas at the Finance Committee in relation to Department of Finance officials in the banking sector, discussed it with the members of the committee. The bill continues the applicability of central bank codes of access and for borrowers to financial services ombudsman after the loan books are sold to unregulated entities, and the borrowers will have some protection under central bank codes such as the Code of Conduct or mortgage arrears as they had before the loans were sold. The simple mission, as the Department pointed out at the committee, was where loans are sold by a regulated to an unregulated entity, that they maintain the same regulatory protection as they had prior to the sale. It also allows for to regulate credit servicing and ensure borrowers can complain to the Financial Services Ombudsman if the need be, and all consumers and SME loans are covered by these amendments. The Central Bank Consumer Protection Code affords consumer protection, basically in relation to limiting communication, personal visits and compliance of outsourced activity. And having experience of one individual with a bank who has considerable loans, I won't get into the details, but through some fault of his own, obviously, but obviously also being pressurised by the bank, and it's related to I won't get into the details, but I can say that the level of attack and the comments made by that bank to that individual, which have added huge stress to his life. So there's certainly grave concerns about the pressures that some banks are putting on individuals who have substantial loans, and the effects and the impacts that this is having on people's state of mind and their health. In relation to SMEs will also have protection on the business lending code, the business lending code, regarding arrears and complaints resolution, and indeed credit unions, if their loan books are sold, allow borrowers are also afforded the same protection as other borrowers, and that's certainly welcome. On this whole issue, Chairman, the government has listened, and the government has acted. Concerns raised by people have been acted upon by the Minister and the Department. Just one email that I received, a section of it some time ago, and again I won't get into names, but he wrote, "My loans, and I presume many thousands borrowers from IBRC have loans that are repayable, and demand is a condition of the borrowing. In effect, this means that the acquiring bank can force a borrower to sell the property at whatever price it decides and make the incumbent either bankrupt or suffer the loss of their investment. It appears that loans can be purchased by foreign banks or venture capitalists who are not governed by the Central Bank of Ireland and can do what they wish with the loans they are acquired." So I'm sure there are many other cases like that, which have contacted deputies across the House who will welcome this regulation. As a member of the Jobs Committee, I welcome the initiatives in relation to SMEs. We always hear about access to finance and the importance of access to finance. Equally important to that are the terms and conditions that apply to that finance. And, you know, if leeway can be shown to businesses, it can mean, in some cases, the difference in saving or losing jobs. And every job is obviously important. We also know that local bank managers have such an importance in relation to knowing their clientele and knowing the circumstances that they're dealing with. And outside bodies will have no regard to that. It'll just be another number. They won't have know the business. They won't know the employees. So obviously regulation is important. The Financial Services Ombudsman Bureau has stated that from their view, that such consumer experiences considerable frustration and a sense of unfairness when the regulatory protection of access to the financial services ombudsman offices is denied to them by the virtue of the regulatory status of the financial services provider. So I certainly welcome the initiative to allow them to avail of that service. So overall, Chairman, I'd like to welcome this badly needed bill and welcome the consultation that took place in its preparation.